Welcome to the second hour of Turning Hard Times into Good Times. I'm pleased to have with me once again Andy Hoffman. Andy has a CFA. He is a financial analyst. He's worked with several firms in the past, most notably as an analyst, a really high-ranked oil service analyst at Solomon Smith Barney in the past. That was 1999 through the year 2005. Since then, since about 2002, actually, while he was still at Smith Barney, he started focusing and now focuses entirely on precious metals. And since 2006, has written free missives that are available on the internet. And I would really recommend that you check out Andy's work because he really does provide a lot of, I think, very important, thought-provoking ideas, counter to what you're going to hear in the mainstream most of the time. And I think very, very accurate in his analysis and his views of the way the world really works as opposed to the way we're supposed to think it works. So thank you very much, Andy, for coming on with me once again.
Well, thank you. Very kind introduction. And again, I'm always honored to be on this show because you were one of the first people that I read when I started reading about gold and silver 12 years ago.
Yeah, that makes me very happy to hear that because, you know, I'm an old guy. I've been around for a while. And so that maybe there was some influence in some people is thinking along the way years and years ago. You know, it's always a collective effort, I think, to try to dig out the truth, Andy, and nobody makes a more diligent effort in that regard than you do. We have a lot of people, I think, that you and I both hold in high esteem that's true of. And certainly, you know, you could go along, Andy, probably make a heck of a lot more money if you wanted to stay if you weren't truthful to the desire, if you weren't honest in your desire to find truth, you could make more money probably playing the game on Wall Street than you are now. Is that a fair statement?
Well, I left Wall Street in 2005, and yes, you know, the stock story is that it was simply because I couldn't take it anymore, and in many ways it was true. By the time I left in 2005. In the aftermath of the whole tech wreck and all the scandals at my own firm regarding you know, the whole WorldCom and Enron and all kinds of things, I was so disillusioned by what I was doing for a living that I really didn't want to do it anymore. But that said, part of it was simply because what I did back then, when markets were relatively free, no longer exists. There's only a handful of stock analysts left. Most of them were laid off long ago. I was part of multiple rounds of layoffs at Solomon Smith Barney because they just don't do it anymore. Until this year, with the whole Fed money printing, creating these crazy merger and acquisitions that are going to be giant failures, the game of research and raising funds on Wall Street has largely been dead since the tech wreck. Now it's all about high-frequency trading and the carry trade and ZERP and insider trading and all kinds of things that have nothing to do with the Wall Street that I worked on. So no, I don't think there's many opportunities for someone with my credentials to even go back to Wall Street anymore.
That's interesting. So this is sort of my experience too. I must add that I started out not on the investment banking side but on the commercial banking side as a credit analyst many years ago. And many years ago, Andy. And in those days, the New York Times, on a Sunday, if you picked up the New York Times, it would have 2 or 3 full pages of credit analyst advertisements. They needed and wanted people that could come in and help the credit committees understand and do the research and put together analyses of these companies to figure out whether or not the companies could pay you back. Then what I noticed happening as I was working at ING Bearings, and I noticed that ING hired somebody from Citicorp to come in and figure out how they could just not have to spend so much time and energy figuring out whether an individual corporation could pay you back, but if we could just bundle these things together and sell them off as a whole portfolio and then get people to buy bits and pieces of that. That was the game that was played then. And so what you're telling me is sort of is sort of similar on the you know, in the I would say among brokerage houses, among investment banks, because it seems like there's, you know, it was too expensive to ask the question and to do a lot of due diligence to figure out. So what are they doing now? They're just doing like these high frequency trades. They're doing, I guess, mathematical models primarily and trying to pick pockets as soon as they can without really worrying about what the underlying value is of the assets they're buying and selling. Is that a fair statement?
Yeah, well, right now there's no analysis at all. Why do you need analysis when you know that the governments are either printing money to help support markets or they're directly buying them? I mean, the craziest thing, the giant pink elephant in the room is, we just saw studies that showed that central banks now own perhaps $25 trillion of stocks, or half the world's market capitalization. We have the Bank of Japan literally telling us every day we are buying stocks, and people will still listen to, well, I take it back. They're not listening to CNBC with its record low rating. But there are still people who believe that, quote, the market is rising. And as for the sovereign bonds, I mean, Mario Draghi said, I'm going to do whatever it takes to save the euro, which means I'm going to print money and buy all the sovereign bonds. So then everyone bought the sovereign bonds ahead of them. I mean, it's that simple. They're just front running. They don't have to analyze these things. I mean, do you think that Greece would have plunging yields? Do you think Spain and Italy, which are falling apart, and Germany, which is in recession and has all these loans out to the pigs, would have record low yields? Of course not. There's no credit analysis going on anymore. Mm-hmm. There's no stock, and there's certainly no fundamental or technical analysis in the equity world, mm-hmm. where everything is rigged and none of those traditional things work anymore.
Andy, no wonder, and for good reason, Wall Street is held in such low esteem. I believed that when I worked as a credit analyst that I was doing something that was good. I was analyzing companies in that way. To the extent I was good at what I was doing, I was helping to preserve depositors' wealth. I believe that was fair. I think that was, it wasn't maybe like doing a charity or something for people. I was interested in making a good living, but in the process I worked very hard. And I know you did it as an analyst too, as a top-ranked analyst. You must have worked extremely hard, and knowing you as I do, I know you're a man of conscience, so you certainly would have. So this is, this is what we're doing in the process. I'm sure you'd agree with this. Is that we are destroying capitalism. David Stockman's talked on this show about it, and certainly, when you repress interest rates as we have, what you're really doing is not allowing the markets to allocate capital efficiently. But certainly, this whole idea of not analyzing credit worthiness or the robustness of a company's cash flows and so forth is just, it's just criminal, but it's also self-destructive, isn't it?
Yeah, and going back to what you said about, you're a banker and you felt you were doing something good for society, and I too thought that because I believed wholeheartedly in what I was writing about energy, and it turned out to be right. I could have been wrong, but it turned out to be right about the growing supply-demand tightness that we see over the years, and I really felt good about it. The problem was that I was constantly told all day, and especially as we got toward the internet boom, which even sucked in the oil sector, about what I had to write and who I had to write reports on and give them buy ratings. And, again, like you said, it's not as Lloyd Blankfein would call it God's work, but it's productive work. And I think what we're doing today, you and I, is a better equivalent of God's work, because we really are helping to protect people from something that we know is coming. And, you mentioned David Stockman and the misallocation of capital. There's very few of these, what I call the good, smart people out there who know what they're talking about and care about your well-being. And obviously you'd be one of them. But I think he's, it's not like he's new on the scene, but he's certainly new on the scene as being a public stock financial market analyst. And he's one of the best out there. I read almost everything he says. And he's absolutely right when he says the great deformation. There's no such thing as markets anymore or fundamental technical analysis. It's all about the governments not only just trying to prop up the world, kick the can that last mile, but to suck everything they possibly can out of it before that last mile is through.
Andy, how important do you think it is? You write a lot about the manipulation of the precious metals markets.
Who, me?
How key is that whole issue? I'm going to ask you, you wrote an article, or at least it was titled The Six Sigma Precious Metals Manipulation Proof, and I want to ask you about some of that. We talked to other people, of course, about that sort of thing on this show, but how key is the manipulation of the gold price to the overall manipulation of the markets that you were just talking about? In other words, if the gold price were to start to take off, would that be a deterrent to the kind of evil stuff these governments are doing and these bankers are doing to us?
Oh, absolutely. What I call, you go back to 2011, First when silver hit $50 an ounce, and then in September when gold hit over 1900 and silver was 45 again. I mean, we were talking about cataclysm because 2008, the government's their only response, they were like a deer in headlights with the whole crisis, was to print money. And there they were 3 years later, and it was clear everything wasn't working. I mean, Europe was collapsing again. We lost our credit rating. How was, our AAA credit rating?
Yeah.
Gold was soaring, and there was a lot of fear in the streets. And I call that period, there was a recent article I wrote called The Point of No Return. That's where they kind of went all in. They said, wait a second, we absolutely can't let this happen. How did we let the gold price get out of control? We thought we had it down in 2008, and look where it is now. And I mean, this tiny little market is, to me, the most important market in the entire world. And silver, what I call the financial world's Achilles heel. Everything in the government's power, the U.S. government's power, is being utilized to keep the prices down. Because if they go up a little bit, look, it's ingrained in our DNA. Two things: you could be the most layman of all laymen, not know anything about the financial world, but you kind of are taught to believe genetically that if the Dow goes up, things are good, and if gold goes up, things are bad.
Right.
That's why they need to keep the price down and keep the Dow up. And I mean, it's becoming so blatant. As you said, my article the other day was called Six Sigma Manipulation Proof. And it's one of many articles I've written like that over the years. In fact, it's so funny. My friend James McShirley, also of GATA, he wrote about the exact same thing I wrote about the other day. It's called the MOPE, the mother of all mopes, or economic deceptions. It's so obvious right now that anyone with any big money in the world is starting to know this, and that's why we know that the physical and the paper markets are getting very close to breaking apart.
Yeah, so I was going to ask you. So, what will be the trigger that will cause it to happen? Do you see that the paper? We talked to David Jensen on this show frequently about it. He's noting that it's most pronounced in the platinum and palladium markets where there's a very, very tiny supply, but it's also very, very pronounced in the silver market, much less so in the gold, or even though in gold we've seen cash prices be higher than the longer term prices, which is an anomaly. But so and clearly what's happening is in Shanghai, other parts around the world, they're putting together physical markets that are suggesting a more honest venue instead of this sort of casino market that we have, where you just bet in one direction or another and everybody cancels each other out, and you have 100 times more gold that is being traded, paper gold, than is actually settled in London and New York. So do you think, Andy, that at some point in time, people that actually enter into these contracts to buy gold might say, hey, I really want the hard stuff. I really want to own this metal. I don't want to just flip my paper and do it again next month?
Well, look, it's a tale of two markets, as it always been, the Eastern Hemisphere and the West. I mean, the Eastern Hemisphere last year, we had record physical gold demand by far. I mean, it blew away anything we've ever seen. And that was as the paper prices were getting smashed over here. I mean, what does that tell you? Obviously, one of them is wrong, and clearly the physical one is the one that's right, because that's the real gold. And as for what's going on here, I mean, the blaring red signals about what's going to break up the whole paper monopoly are there everywhere. Will the event be a black swan event? Will it be a Ukraine or something like that? Or just the economy falls apart? Or will it be the Chinese decide to call in all their options on the COMEX and take out the tiny amount of gold or silver that's there? I don't know what it'll be, but the fact is, just over here alone, I mean, just last year, the COMEX, the CME said that all COMEX data is no longer true. We're not sure if it's true or not. And now they're suing the CME. In fact, JP Morgan was just fined for repeatedly giving false data. Now someone's suing the CME, saying half of all the trades are wash trades. And we know that the data makes absolutely no sense anymore. And on top of that, we have record high silver open interest with the price falling. So there's something going on. The point is, I mean, where there's smoke, there's fire. Will the COMEX be the linchpin that breaks the whole system? I don't know, but it doesn't really matter. Something's going to break it. As you said, Shanghai, I mean, all you have to do is look over at what's going on in China right now, where you have big premiums, 10% up to on silver prices. Mm-hmm. They've lost since the big attacks of April 2013, when Obama had his closed-door meeting with the top 10 too-big-to-fail CEOs, and the next day gold price fell $250 an ounce. Since then, the Shanghai exchange, which by far is the largest physical delivery exchange, has had 90% of its silver inventory swept out. And there's a good chance that by the end of this year, there'll be no more inventory on the world's biggest exchange. So somewhere or other, it's going to break. I truly believe that it's going to break in silver long before gold. I mean, we've had shortages in silver in 2008, 2011, 2013. So I truly believe that that's going to be what breaks it. But what will make it happen and when, I don't know. I do know it's not going to be years away. It's coming soon.
Yeah, and I don't want to say fortunately. I want to say unfortunately, because as you and I talked before we went on the air, that it's when the day of reckoning comes, it's not going to be good for anybody. But I think you and I both believe that owning some physical metals, it's probably better than not to when that day arrives. And I like to tell my listeners all the time, I like to emphasize this, I'm not a gold bug because I want to get rich from miseries of other people. I'm a gold bug, and I think, Andy, you would agree with this. You also believe in gold and silver and owning it, not because you're cheering for any kind of misery, but simply because the die is cast by the policies that have been put in place to destroy the currency, clearly to help those that have control of the monetary system to enrich themselves at the cost of everybody else. But I'm sure you're generally in agreement with that.
Absolutely. I mean, the number one point that I say to people is that gold and silver are not investments. They are saving. If you want to invest, you can buy mining stocks, ETFs, all kinds of paper things. But if you want to simply preserve value over time, you buy the real thing. And again, you can call it insurance, you can call it protection, you can call it wealth preservation. But the fact is, you're not buying it for it to appreciate in value. You're buying it because you expect other things to depreciate in value. And yes, you can theoretically get rich, and frankly, you'll get more than theoretically rich, but it's going to be a very ugly world when you are rich. It's, again, as you said, it's not something I look forward to, but, we're all humans and we have a survival instinct, and right now, my goal is to help people to survive.
Yeah, and indeed you do that at milesfranklin.com. Tell our listeners it's milesfranklin.com. You can read Andy's excellent insights. There's other writers there as well that are well worth reading. And also, you can buy gold and silver at milesfranklin.com. So that's another thing to keep in mind. Is a competitive business for sure, Andy, but you guys do a great job, and people should check you out if they're looking to buy some precious metals and take delivery of it. Of those metals. Now, I want to ask you if you come in contact, I'm sure you do, with people from your previous life that believe that gold bugs are just misguided, uneducated, stupid people who don't know what's going on. And I mean, what do you tell people that are fully drinking the Kool-Aid of the establishment? What do you tell them? What one or two points would you make that are most like smoking gun evidence that gold and silver, these markets, are being manipulated?
Well, you know what? I wrote a piece several years ago called Friends, Family, and Colleagues. And basically it says that, it's just not worth preaching to people who don't want to listen.
Uh-huh.
I mean, I spent years talking to friends and family about these things. And, yeah, occasionally someone will listen. They'll listen more when the price is up because no matter what you tell them, they still think of things as investments. And when gold's up, they want to own it. And when it's down, they don't want to own it. It's the whole thing. So I don't really talk, frankly, to anyone about it. Occasionally, someone may say, well, what do you do for a living? And if you're lucky, they'll follow it up with a slight question. But generally speaking, no one that I speak to ever asks me these things, aside from when the price is spiking higher. So I don't even know how to answer that anymore. If people were to ask me, I tell them the truth, but not too many people want to listen to the truth, not just about gold and silver, but about a lot of things going on in the world, whether political, economic, or social.
Yeah, one of the things I wanted to ask you about, because I know you do opine also on some geopolitical issues, and the Ukraine, I think you wrote something about the Ukraine, or at least you maybe talked about the Ukraine on the weekly podcast that you do. Also, tell our listeners, while I think of it, where is that podcast that you can go to listen to? Because you're on, I think, every Monday, you said?
I do many podcasts. In fact, I do my own podcast every Thursday afternoon. I also do another one every Monday, another every Thursday, and several others. It's all milesfranklin.com. I mean,
Okay.
that's what we do. That's how we distinguish ourselves from our competitors, aside from our experience.
Yeah.
Is our educational blog.
Great. Okay. Well, that makes it simple then, for sure. But let's talk a little bit about the Ukraine. I have Daniel McAdams on this show almost every week because Daniel, I think, provides. Well, first of all, he was Ron Paul's expert in that area when Ron was a congressman, and he stayed on to head up the Ron Paul Institute for Peace and Prosperity now. And so I have Daniel on almost every week because I think he has great insights into what is really going on in the world as opposed to what we are, what we are given from the mainstream media. What are your thoughts about the Ukraine? Maybe back up a second. How do you see the connections? Do you see connections between what we're doing overseas in this monetary meddling, or let's say monetary mess that we've gotten ourselves into?
Well, I try to stay away, in my commentary from the political side, other than, of course, bringing up all these issues. I've written about the Ukraine and Iraq just to show that there are factors that are involved in the precious metals markets and the manipulation of other markets. But, if you're asking how do I see it, I see it as, look, we printed so much money, we and everyone else, all the other central bankers, that it's created a serial transformation around the world of unrest. You've seen inflation. It started with the Arab Spring because those countries spend the most percentage of their income on food, and it's spreading like wildfire around the world. So it's no surprise. People may want to try to chalk everything up to, individual stories, but the fact that you go from Brazil, Argentina, Turkey, Thailand, Ukraine, the Middle East, and even here we're starting to see social unrest. Mm-hmm. It's not a coincidence that this is all happening when so many people are experiencing significant issues in paying their bills. As for the Ukraine, it's a perfect example. I mean, a Martian would come down and say, does the U.S. want a war that badly? Why do they want to fight against Syria and Iran and Iraq and Libya and Ukraine and Russia? It seems like all we want to do is start wars, which is, basically what happens at the end of empires. They look to take from other people and to distract the population. And again, that's just a personal view. Just from looking at what I see, it scares me.
Yeah. Well, I have to think, Andy, let me know what you think about this, but it seems to me that we are, when I look at total debt in the United States, it's growing exponentially. Income is growing at best. I don't think it's growing at all. I think the real income and GDP in the United States is continuing to shrink. That would be a question I would ask you your opinion on. But at the very least, income is not keeping up with debt growth. Debt is growing very, very rapidly, much more rapidly. And so it seems to me that, as Rick Rule said on this show last week, what people confuse, they confuse insolvency with liquidity. And, people, the policymakers think all we need to do is pump some more money in the system. We got liquidity. And Rick is saying, no, what we've got is a global insolvency problem. And people are having a harder and harder time making ends meet. Average people are. And so it seems to me very, very logical, though, as the empire is trying to support its debt, it has to find more income from some source, right? An empire nearing its end is becoming a desperate, untamed animal, a wild animal almost, that can't stop itself.
And printing money certainly doesn't create income. In fact, all it does is lower interest rates so that there's no income. It's assured that no one has any income. And then, of course, the put that they put on the market encourages everyone to buy all the bonds on the planet until there's literally a zero interest rate everywhere. And that's what I believe will happen. I've been saying for some time, I believe firmly that the U.S., Europe, Japan, everyone will have zero interest rates because everyone's just going to front run QE to infinity until, of course, we reach it and we have hyperinflation and everything is destroyed. But again, it's simple math. As you said, real income, real medium income in this country peaked in the 70s and it's falling faster than it's ever fallen.
Yeah.
And that's real income calculated with fake inflation statistics from the government. It's obviously a lot worse. That's why the debt load of the nation, be it the individuals, municipals, corporations even,
Yeah.
who are supposedly so rich, their debt has been surging, and of course the sovereigns is going way up. It was like I was reading today about that one fake year where during the Clinton era, right at the end, that we supposedly had a surplus, and of course it was based on a bunch of fake accounting and the biggest fake economy of all time. But the fact is, the U.S. debt went up that year as well. So obviously we didn't have a surplus, and so as a rule, anytime you see any data that comes out from the government that's even remotely spun as positive, all you have to do is read into the internals and you'll know it's a lie. If the jobs report comes out next week and says it's 300,000 jobs, take a deep breath, read it, and sure enough, you'll see 25 reasons why it's a big lie. And that's fortunately, for us oppressed gold bugs, as you said, everyone hates us, that we have on our side. We've been right for as long as I can remember, and we're more right now than we've ever been.
We are, but most people don't see it, and they won't see it until the Humpty Dumpty falls down from the wall, I suppose, and then we'll because I can tell you, Andy, that when I started this radio show in 2009, was right at the bottom of the post-Lehman Brothers decline, and there was an audience that was growing very, very rapidly. But in the last couple of years, since gold has gone down in real price and real value, and the real price of gold has declined, mining companies that I cover are falling on really hard times given the artificially low price of gold and silver. That people aren't as interested as they were. So I think there will come a day when they will be again, and I agree with you. I think we're not that far away unfortunately, from a resolution of this. Well, I think you just answered one of the questions I had for you. How can it be that we're continuing on with how can it be? The government tells us that the economy is getting stronger, it's getting better, and I guess you just answered it's a lie, probably. But how can it be that we have lower interest rates if the economy is getting better? Doesn't
because
work out.
The government is printing money and buying bonds, and they're printing money and buying stocks, and they're taking every economic release and fudging. And the thing is, it's not like it's good fudging. I mean, you look at the jobs data, and it's pretty obvious that the only jobs that exist are the BLS's phantom birth-death jobs, which aren't real jobs. And the ones that are there, they're telling you that, yes, they are all part-time temp jobs, which in the past weren't even counted as full jobs. A lot of them pay minimum wage. None of them pay the holy grail of the world, which is health insurance. I think those days are past. So even what they tell you is good isn't good. In fact, I wrote an article a few weeks ago called Island of Lies, and I said the only place where you see positive economic data in the planet are the fake U.S. jobs numbers. I mean, look at weekly jobless claims. They completely detached with labor participation 5 years ago, just like everything else. It's not good news, but they claim it is. And then these diffusion indices, which even Wall Street says aren't even worth your time of day, and they have absolutely no correlation to anything. I mean, heck, China's had PMI indices below 50, contractionary, all year, and yet they report 7.5% GDP growth. We had 53 or 55, very strong diffusion indices in the first quarter, and GDP went down 4%. So I mean, again, there is nothing in the real world that anytime you look at real data, whether it's industrial production, durable goods, retail sales, real unemployment, the median home prices, everything is going in the wrong direction, and that's why the propaganda leg of the I call it the evil troika, money printing, market manipulation propaganda, is rapidly dying. I mean, no one's even listening anymore, and pretty soon no one's going to care less about what the Dow Jones propaganda average is either.
Yeah, so the numbers are going down with the mainstream media, that is the financial networks like CNBC, I guess, and probably even Bloomberg, I don't know. And at the same time, the internet is picking up, so I guess there is some hope for truth. I mean, I think people are definitely, especially younger people, are turning off the mainstream and using using IT, using information technology on the internet and elsewhere, for sure.
Absolutely. I mean, not only is the mainstream media you talk about, the Bloombergs and the Yahoo Finances and the CNBCs, no one's listening to them just because they're tired of just the lies and the propaganda. But on top of that, as you said, no one's even using the medium anymore. No one's reading news articles or watching the news. They're using their brains and it's several generations now, or at least two generations of people that are proficient in the internet to look for truth.
Yeah.
And that's why we're doing so well at this. And, just to go back to what you said before about people, they're down on the sector and the miners are down. Yes, again, can't emphasize enough, no matter how much you try to teach people, they are brainwashed. First of all, most people don't have much money to help themselves even if they wanted to, but they are brainwashed to believe that everything is a market, and if the government says and Wall Street says gold is a volatile investment, then they just care about it when it's up. They want to own it. When it's down, they don't. So you're never going to change anything. Of course, the other side of the coin is, yeah, the miners are down, but they're down because the government has destroyed their business, and as a result, you're going to see dramatically lower production of gold and silver ad infinitum. I don't think we'll ever see the levels seen a decade ago. So the government's kind of shot themselves in the foot in their quest to, kick the can that extra mile.
Yeah, there's no doubt about it. Well, I think there's no question about that, and I think that, though, longer term, I mean, the question that I would have, here's a question for you, Andy, with the BRIC countries looking to compete with the dollar, do you think that's a possibility anytime soon? Like, do you think they're obviously trying to set up something that will compete, set up their own institutions that mirror what we're doing in the West? Don't know that that's a good thing, but clearly, Putin and the Chinese and various countries are not all that happy about the dollar they're using, which because it's losing its purchasing power very dramatically over time. So I guess one question I'd like to ask you before we wind it up here is, do you see that as possibly one way of this whole system breaking down? Is this competitive thing? I know Jim Rickards has been on this show, has talked about it. Is that one possibility? Do you think? And the other thing I'd like to ask you before we let you go, how does this thing unwind? Do you think we see a deflationary implosion? We get another Lehman Brothers type of a situation where just debt default sort of like dominoes causes the whole system to implode, and then we get a hyperinflation afterwards as governments try to print prosperity? Or how do you think this plays out? And maybe answer that question first, then, if you want to tackle the BRIC issue.
I'll go back to the BRIC one first.
Okay.
The last one is going to be the punchline. I mean, look, let's face it, the BRICS countries aren't exactly doing well themselves. Brazil, India, South Africa are collapsing right now, and Russia, I think, is not. They are decidedly becoming a power. China's got some major issues, but they also have the world's manufacturing market share and all the gold. So, yes, look, when it comes down to it, power shifting from west to east. Anyone who hitches their wagon to the Chinese and the Russians are going to be in a better position. But, of course, between now and then, we're going to go through a very painful global retrenchment where no one is going to be spared. But when the ashes, rise, it's going to be the Chinese and the Russians that are going to have the biggest say because they have the most gold.
Mm-hmm.
The final, what you're talking about with the West versus East, I mean, part of it is the currency wars going on right now where the Western currencies do their best to destroy each other against each other. God, I was reading Mario Draghi's comments at Jackson Hole. Scary, talking about how happy he is that the euro is falling because they've been pushing it down, and the direction of their policy is going to make that that an even wider disparity. He's basically saying, yeah, I'm trying to destroy the euro just like the Japanese are trying to destroy the yen, and the U.S. is trying to destroy the dollar. I mean, this is what I call, it was an article a few years ago, the final currency war. And it's going to go on and on and on. And the point is, the biggest problem is the emerging market currencies are the ones that get hurt the most, the ones that are not the reserve currencies like the dollar and the yen and the euro. So that just makes them even more angry. And so something big in the West versus East is gonna be upon us soon. And then finally you said, well, how is it going to happen? Well, you never know, right? It could be a nuclear war. It ends tomorrow, or it could be something a little more gradual, or you never know what will happen. Will we have a, quote, deflationary collapse? We very well could. I mean, I've said all along, though, that the odds of markets hyperinflating are bigger than they are deflating. I mean, look at the Venezuelan or the Argentinian stock market soaring right now, or South Africa for that matter. So we very well could simply hyperinflate and just lose everything in real terms. But with all that's going on right now, at any given time, you could have an event that causes a 2008 style crash of everything.
Yeah.
Either way, you're going to lose in real terms if you own paper assets. There's no doubt in my mind, and you're going to be among the best performing quote investments of all time if you're owning simply real money.
Yeah, there's no question about it. I suppose that's a good note to end on, Andy, because it's a note of agreement. Of course, I knew that we wouldn't disagree on that issue, but it's always good to have your insights and your comments. Tell our listeners once again, it's milesfranklin.com. Andy writes prolifically there, and there's a lot of different shows that he's on, different podcasts that are there, and his own on Thursday, one every Monday with my friend Carrie Lutz. So I would really suggest to our listeners, we want you to keep listening to this show, of course, but also it's well worth going to hear what Andy has to say and what he's writing. I want to thank you very much, Andy, for being with us once again. It's always a pleasure.
Same here, Jay. Appreciate it.